Hey, it's Motley Fool Tech Review. I'm Chris Hill here with Lyons, George, and Eric Bleeker. Let's talk Zynga, which is in the news this week, surprisingly, because the stock up around 17% over a 2-day period. New CEO, Don Matrick, leaving Microsoft, going to be the new CEO at Zynga, and somebody likes this deal.
I don't think he got the message. This is a one-way street that he's headed the wrong way. You've got people literally fleeing Zynga like they're burning and on fire. And here comes Don Matrick from Xbox, which has been succeeding. It's a very intriguing storyline. Also because there's been some recent troubles around Xbox as well. We saw the unveiling of their newest platform, Xbox One, kind of get out to a rough start. But apparently this was about a 3-month wooing by Mark Pincus. And
a little courtship.
A little courtship. Maybe some wine, some strawberries involved. And they eventually won him over. Partially, you might guess, because Microsoft's going through a big reorganization, and also because of the recent struggles. But let's talk about what this matters to Zynga. I think people have gotten really excited about this, but they're forgetting one thing. Mark Pincus is still around.
Yeah.
He's still their chief product guy, and their big problem is their products haven't been successful. Oh, also, he's a notorious micromanager who hasn't been able to work with other people in the past, all of who have left the company, and he's still going to be sitting there with Don Matrick. So I think people are really excited about this. This is one of those companies that's so down and out, people will look for any news to get excited on. But I don't know if this is it. And also, whenever you see a bull thesis for Zynga, it's basically, hey, look at their cash on the balance sheet, look at their real estate holdings, fine, and look at their opportunities in gambling. And I don't know if Matrick, coming from Microsoft, adds anything to that gambling kind of bull thesis.
And yet, when you look at the stock being pounded the way it has been, and the reaction, again, just over a short period, but it does seem like people are looking at Matrick and saying, hey, look, management matters. If this guy can turn it around and somehow negotiate a path with Pincus, because to Eric's point, he's the chief product officer. He's no longer the CEO, but he's still the chief product
chairman of the board.
And still chairman of the board. So.
And he still has 61% voting power in the company. I mean, all the decisions flow through him because he's got these Class C shares he created just for himself. So he's still the top guy, you know. I feel like the bullishness around the stock right now is investors just looking for any sign of hope that they can. I mean, and frankly, I think this is a pretty hopeful development. I mean, Pincus, one thing we've been hearing over the last couple of years is that the culture had gone a little bit awry, that had been this sort of, eat or be eaten culture. People were on the chopping block with pretty much every project they undertook, and that's just not, in my opinion, a good creative environment. Now, I don't know much about, Don Matrick. I do know that, he took Xbox from this fledgling little system with 10 million installed units to an 80 million installed units success story. If he has been being courted for the past 3 months, there's a chance maybe he was a little bit detached from the latest Xbox flop, that his hands aren't on that. The biggest question mark, I guess, to me, I understand the bullishness is, how do we get from a new CEO to new hit games? Because I don't think he was developing games at Microsoft, and that's what Zynga really needs to do. They need that next hit, and they haven't had one. I think it's a very interesting story. It's certainly, I've been dying to get this in here. Pincus is sort of the second high-profile recent tech IPO founder CEO fire. Last one, Andrew Mason. Andrew Mason, since being fired from Groupon, has gone to work on a rock and roll album of inspirational business rock. It's called Hardly Working.
We've all been looking for that.
We've all been looking for it. It's just little.
You can find that on Spotify.
You can find it on Spotify. So I just want to say, regardless of his being shoved out the door, Pincus is doing better than Andrew.
And I listened to that album on my ride home yesterday.
Yeah.
And I'm going to the top today.
Yeah, exactly.
I'm inspired.
Promotion coming your way.
But it actually is
worth pointing out. The day that album hit Spotify, Groupon shares up 3%. I'm just saying.
True.
I'm just saying.
It is worth knowing, though. Groupon, people look at Zynga right now. Groupon is back to that $6 billion level where Google was looking to buy it. And I think a lot of the optimism was moving its founder out. So we kind of have this template or case study of moving someone out who's running a company and shares soaring, on the hope that, it's still a big name. There's still a lot of opportunities. The company still has a lot of cash. So we might just see the same thing playing out with Zynga. Unfortunately, as we've noted, Mason, who pretty much left the company. His album's named Hardly Working because he ain't working right now.
Yeah.
And Pincus will still be chief product, still own the majority of the company, yada, yada, yada.
I'll have to wait and see.
Let's move over to BlackBerry. Shares down around 30% just in the last week alone. And we are once again asking the question, when is the end coming for this company? Because it really seems like it is just a matter of time before BlackBerry gets bought out, maybe for their patents or something like that. Is there any hope for this company?
Yeah, and I think the thing that you have to go back to, one headline is every single major mobile company that's ever dipped into negative operating profits has either been bought out, liquidated, or otherwise ceased business. Every time. And we've got a couple of results coming right now, which is Nokia and BlackBerry. But investors in these companies need to know that once they dipped into losing money, they approached a situation where we've seen time and time again, I believe it's over 13 companies are on this list, of ceasing to exist. So you are inherently betting on this time it's different, and inherently the odds are stacked against you. So does it surprise me that we see the situation playing out with BlackBerry? Not necessarily. I mean, who wants to develop for this platform right now? They're not seeing it. I actually went to a BlackBerry fan site the other day, and
I'm sorry. I thought you said you went to a BlackBerry fan site.
Yes, I did.
First, you had to create a BlackBerry fan site, and then you logged on.
There's actually there's quite the following. It still has a dedicated following, but the main headline was Instagram coming to BlackBerry before Google Glasses. How many people have Google Glasses? The fact that this is a headline says something about the lack of development on this platform. And when you've got that lack of development, people aren't going to follow through with buying handsets. And if people aren't engaging with handsets, then your other assets, such as some of their areas like their enterprise service, which a lot of people talk about as being so valuable, well, you don't quite know the value of that, because why are people going to be upgrading to this if they're not investing in BlackBerry hardware? So for me, it's just a very dicey proposition. I think people have to know the risks of getting involved in a turnaround story in mobile. It just has never worked really. And yeah, I think BlackBerry will be the next one on that list.
Well, and kind of like we were just talking about with Zynga, and you made the point, hey, look, they need games. Matrix is a guy who didn't really make it. BlackBerry needs devices.
Yeah, they need phones that people want to buy.
And this, the Z10 got some good reviews, and maybe that's the last best hope for BlackBerry. But they really need to come up with another hit soon, don't they?
Yeah, absolutely. I mean, the Z10 did get some good reviews, but only 40% of their sales this past quarter were from their new devices. So I think a lot of their business is still coming from selling the old legacy devices in sort of emerging markets, which is where they still have a little bit of staying power.
And they extended their old operating system.
They had to
address this.
Absolutely. Look, when it comes down to it, I wouldn't touch this company with a 10-foot pole. What really seals the deal for me is in the earnings call, CEO Thorsten Heinz said that 2014 was going to be a transitional year for BlackBerry. That was the exact same thing that he said about 2013. When you keep kicking the can down the road in terms of when we're going to finally perform, when we're going to start executing on our key strategies, that's a signal that management just doesn't know how to steer the ship. I think within the next 5 years, you're going to see the company getting carved up and sold for its pieces.
Who's going to get Alicia Keys in this carve up? The chief creative director, where will she go?
Hopefully Google.
Someone will find a spot for her. Speaking of 2014, a lot of people looking at Twitter as sort of maybe the most anticipated IPO of 2014, and yet Bloomberg coming out with a story about Alibaba, an IPO possibly in 2014, and a valuation of upwards of $200 billion. Is that reasonable or is that insane?
Well, I mean, we're going to have to see what the financials of the company look like when they and if they file to do this. But what I find fascinating about Alibaba, number one, China's just an incredible e-commerce story. The willingness of people to buy stuff online. And I mean, in the case of Alibaba, just kind of sourcing as this giant. You can't really call it the Amazon of China because it's something different. It's more like this big market where you can source just any kind of product imaginable. But it's literally driving incredible results. We saw a cover story on The Economist about the company, and it looks like, $200 billion, even if it's over $100 billion, one of the more interesting plays on this is actually SoftBank, which is a Japanese wireless carrier and owns 35% of the company. And SoftBank has soared along with everything in the Japanese market this year. But I think the interesting play might be if we see a retreat in the Japanese stock market because, hey, when things go up 50%, they tend to fall afterwards. And I'm no macroeconomist, but there's a lot of optimism around Abenomics. And if this comes back down, you could potentially have a company with a huge stake in Alibaba, trading at pretty cheap ratios once you back that out. So I think the play for investors looking at IPOs next year is if Alibaba actually comes out and if you get a chance to look at the financials and it's growing as strongly as we thought, we know the market it's in is absolutely enormous. Maybe, people with the wherewithal to do it look at, snapping up SoftBank, which also, might be in the news because they had just recently made a major investment in Sprint. So I don't know. Lyons what would you think about Alibaba?
Well, I would take a look at Alibaba itself. I think that to your point, it's not a sort of apples to apples comparison, Amazon to Alibaba, but they do have this. It's sort of the one-stop shop for you said not just e-commerce, but everything, transactions. Essentially.
Yeah.
They've got business to consumer shopping, consumer to consumer, eBay auction type shopping, payment platform, Alipay. They've got apparently online group shopping is popular in China, and they've got a great platform for that. I imagine there's a sort of a content delivery play coming down the pipeline. Retail is with the rise of the Chinese middle class, retail is growing at 14% a year in China compared to 3% a year here in the U.S. I think SoftBank. I heard one analyst is saying that SoftBank's value could rise by as much as 75% if Alibaba comes out at that $200 billion valuation. I bet Yahoo, who had a 15% stake in the company up until about maybe a year ago.
Yeah.
Just another solid move from Yahoo dumping that. But I think Alibaba itself, certainly as a member of the rule breaker team, I am interested in Alibaba.
Where is Jack Ma in all this? Because so much of Alibaba was tied up in his leadership, and he's no longer part of the company. Is that right?
Yeah, so I think maybe back in March, he stepped down and 25 new executives were brought in. Maybe a dozen new executives, but 25 new sort of managerial offices were created within the company.
To replace one guy?
He with the strength of 25 men.
Yeah.
He stepped down. I think it was a shrewd move. To me, that signals A, that this IPO is coming, and B, that he was smart enough and cared enough about the company to recognize that, hey, even though he was the founder and even though he brought it to this point, he wasn't the guy to be at the helm of a publicly traded company. I think you have a lot of situations. Look at Lululemon. Christine Day just stepped down, and when the founder CEO leaves after it's been public for a while, there's sort of all this investor woe, is this the same company, or is there something terribly wrong with it? Sometimes it just comes down to, hey, an entrepreneur isn't meant to be, answering earnings calls all the time. They're hustlers, and they're not necessarily bureaucrats. So I think.
You mean that in a good way. When you say hustler, you mean that in a positive connotation.
Yeah, go hustle out there on the basketball court.
Not Fast Eddie Felsen.
A little bit of both.
Twitter, Alibaba, which would you rather see? All things being equal, all in terms of solid financials, that kind of thing. Which one would you be more excited to see publicly traded next year?
I love Twitter as a service, but as an investment, I would be far more interested in Alibaba. Just the game plan for a successful investment in that field is far more proven.
All right, for Eric Bleeker and Lyons George, I'm Chris Hill. We'll see you next time.